Ladies and gentlemen, welcome back to another video. I'm your host, TheDividendAristocrat, and it has been a crazy week so far. Some of the companies in my portfolio have definitely been crashing pretty hard while others are performing pretty well, and you can see that on this day alone, the past market day, I was up 1.81%, which is almost $1,300 in unrealized gains. Now, the main thing I want to point out here though is before that, I was actually down pretty severely in this past week, so it's just a bit of a recovery towards the end of the week. Now, I know I missed last week's video, but in this video, I want to highlight a specific stock. We're going to be talking about Uber, which I hold in my own personal portfolio as well. It's going to be a brief video, but before we get into that, let's just take a quick look at my portfolio dashboard because I did miss last week's upload. So in total, I invested $54,600 and my portfolio value sits at $73,500. That gives me an unrealized gain of almost $19,000 or a total return of 34.57%. Now, in terms of dividends earned, I have earned over $2,200 with dividend income, and my yearly income going forward is over $1,100 per year. Now, my portfolio yield is pretty low at 1.59%, but that is my preference. Now, in terms of my cash position, it is sitting at around $6,000, maybe a little bit less than that, but I am looking to deploy this capital if I do see some good opportunities within the next couple weeks. Now, one opportunity that might be worth taking a look at is Uber, which we're going to be focusing on today, and I'll let you guys know my thoughts. As a reminder, this is not financial advice, and I'm just merely sharing my opinions on this channel. So first, let's take a look in terms of performance. If we slide this all the way over to the right, you can see my total return right here for each of my holdings. So my number one position is Microsoft at over 100% total return, and then we have Google, which has been amazing so far. The company just keeps hitting new record highs. Now, if we scroll down just a little bit, we'll find my Uber position, which also has been a pretty good performer. Right now, it's up almost 30%, but just a couple weeks ago, it was up well over 45% of my portfolio value, but it has declined substantially. Now, filtering it out so we can just focus on my Uber position, I want to show you guys why I'm interested in it at these levels. So my average price paid or my cost basis is $64.81 per share, but the current price is at $83.87. Now, that is a fairly substantial increase, but in my opinion, that's right around its fair value right now, maybe even a bit of a discount. So I'm considering purchasing more shares at these levels. Now, just to not waste your time and be super upfront, I'm not sure if I'm going to be buying at $83. If it drops to $75, I am for sure adding more into my position unless anything fundamentally changes with the company. Now, an $8 decline might seem like a long ways off, but if we continue seeing a broader market decline, I'm sure it'll get to that $75 mark and I'll be happy to add more into my position. Now, the reason I'm not stressed or rushing to add more at these current levels is only because I already have a fairly large position. I purchased 66 shares of the company at an amount of $4,200 and the current value is at $5,500, making it one of my larger positions within the portfolio. If we scoot all the way to the right, we can see that the allocation is already at 7.5%, and I tend to like to have my companies at about 5% maximum allocation if I can avoid it. So anything over 5% is more of a temporary situation. Basically, if I think that Uber is trading at a good value, I'll add more even if it pushes me to about a 10% allocation. But over the long run, I hope to be buying other companies and balancing it out in that manner. So I think even though it's 7.5% of my portfolio right now, I think over the long run, it will come down to about 5% without me having to sell any of my stocks in the position. Now, if I didn't already have such a large allocation, I would probably be starting my position at around $83, maybe $80 per share, but I already do have a position, so there's no reason for me to rush into buying more shares right now. Now, the gains so far have been nice. I'm up $1,200, or like I mentioned before, almost 30%, so I hope to see this position continue growing in the future. Now, hopping into Google Finance and showing you guys why I decided to spotlight this stock right now is because it has seen a pretty big decline. So in the past 5 days, it's actually down over 8%, which is pretty substantial. In the past month, it's down over 9%. Just in early November, the company was trading at a stock price of almost $100 per share. Now, if you look at the year-to-date chart, it tells a different story. The company is performing very well. If you see right here, my cost basis is around these levels, $64.91 or so. And so the company's stock price has gone up substantially since then. Now, you might see here that the PE ratio is 10.74, and I want you guys to ignore that. They have a lot of investments that affect their earnings in pretty weird ways, so it's not really worth taking a look at their price to earnings ratio as a good valuation metric. Instead, I would probably use their price to free cash flow and just model out how fast you expect their free cash flow to grow over the next 5 years. Now, over the past 5 years, the company's performed pretty well. It hasn't quite doubled if you bought it 5 years ago, but if you bought it here at the bottom in 2022, that was a fantastic opportunity, and I wish I would have purchased my shares there, but you would have been up over 300%. And I did promise that this would be a fast video, so let's just take a quick look at their financial metrics. I just want to point out some stuff that I do like about the company. So the revenue per share has been growing quickly over time, and you can see right here the earnings per share are now positive. They were negative for quite some time, but they've been able to turn them positive over the last 2 years. Now going forward, I expect this pattern to continue and I expect it to grow pretty quickly, which is awesome as an investor. In terms of free cash flow per share, which is the more important metric in my belief for this company because it's easier to track for them, the free cash flow per share has been growing quickly and it first became positive in 2022 and since then they've been able to maintain it and actually grow it very rapidly. Now, one thing that is a bit concerning compared to more mature companies, their shares outstanding, they are going up over time. And for most of my investments, I tend to see them going down over time as they buy back more shares. However, Uber was in its growth phase for quite some time and it's still growing pretty rapidly. So that makes sense that have shares outstanding going up because they probably do a good amount of stock-based compensation. Now that being said, the company is slowing down their stock-based compensation. As you can see right here, it's starting to stagnate and even go down some of the years. So if they continue that pattern, then free cash flow will explode compared to stock-based compensation and these shares outstanding will start going down, especially with the shares repurchases that they started doing in this past year. So I think going forward, this trend of the shares outstanding going up substantially every single year will not continue. I think it'll start going down, maybe slowly at first, but eventually they'll start cannibalizing their shares like a lot of larger companies do. Now, free cash flow versus stock-based compensation paints an interesting picture. The stock-based compensation does make up a fairly large proportion of free cash flow, but at the same time, the stock-based compensation is going down as the free cash flow continues to go up. For me, this is currently not alarming as an investor, and I'm happy to see the progress that they continue to make in this regard. Now, the reason there's no series here is because they don't pay out a dividend, and that's totally fine by me. I'd rather they continue investing back into the business. Now, in terms of net income margins, it was negative for a long time, of course, because their earnings per share were negative, but now it has turned positive. So not much to see right here. We'll have to keep tracking this over the next couple of years. And their capital expenditures are actually fairly low because they are a tech-based company. They don't really buy the cars in their fleet. Now, if they do start purchasing their own self-driving fleet at some point, then of course this CapEx number will go up significantly. So that's something to consider. Now, their return on invested capital was also negative for quite some time, but it's now turned positive. If they can keep it between the 10 to 20% range, that'd be fantastic. Overall, I think Uber is a strong company positioned to succeed over the next couple years, and so we'll have to see how it plays out. For me, at $83 right now, I do think it's a fair price to be considering if you don't already have a position in the company, but since I already do, I'm going to hold off for now. If the company's stock price does drop below $80, I'd be very inclined to purchase more shares, but if it hits $75, I will very likely purchase more shares. If that does happen, I'll probably put a post out on the community tab of my YouTube channel and also one on my Patreon as well. Definitely let me know in the comments down below what you guys think of the company and whether you're purchasing at these levels or if there's a certain price you're waiting for it to hit first. As always, that does bring us to the end of today's video. I really hope you guys enjoyed taking a look at my position in Uber and my thoughts on Uber at these current prices. If you haven't yet watched my video from last week where I talk about my dividend income for the month of October, check out this video right here. And if you want to see 3 cheap dividend stocks to buy right now, check out this video right here. Remember, the best time to invest was 10 years ago. The second best time is today. I want to thank every single one of you guys for watching, and I will see you in the next one.